Today's job print came in soft. Now everybody is betting that the Fed is likely going to reduce rates later this month, but I'm not sold, especially with inflation sticky. Let's take a look at the charts and see if we can uncover something. So the first thing I have up here is the S&P 500, and we can see we just made this really impressive 5-wave impulse wave, and we can see some divergence here. We have the price action continuing to trade higher. We can see that with this line, but yet the RSI and the ROC have traded lower over the same time span. That is not a good sign. That tells us that a lot of this momentum is building up, and we're likely going to see a correction here. All right, moving on to Caterpillar. And this one is pretty interesting. So Caterpillar had a impressive impulse wave here, and it had an extended fifth wave. And the extended fifth wave on a textbook move is 61.8%. And ironically, that is exactly where this one went. And that's measured from the bottom of wave 4, and it just perfectly right up here, and then it's coming back down. So now I'm predicting we have an ABC wave coming, and wave C is generally the same distance as wave A. If we get the symmetrical move down, we're likely going to see Caterpillar fall to about 400, maybe a little bit north of 400, but that's the move we're expecting. We're at 420 right now, so that's going to be a pretty good move. A move we could come in there with puts and take some advantage. And we can see we had some divergence here. Look, we kind of outlined that here. The oscillators were down over the same time span when the stock was up, and it sure fell. So that's kind of like what we're seeing in the S&P 500. We just haven't seen that move yet. Now, if I move on to Taiwan Semiconductor, this one is interesting as well. So we had a impulse wave here. Now, wave 1 and wave 5 are off in the same distance, and that is almost exactly textbook move right there. But here we have an expanding triangle, and we have an A, B, C, D, E move. A little confusing here because this one looks like it's going higher. We could have a wave 1 starting right here, and then this could be 2, and then 3 maybe up here, maybe another 4 down here once it hits this resistance, and then 5 breaks through. That's a possibility, but something to keep an eye on. Now I want to head over to AMD. So AMD kind of looks like Caterpillar a little bit. We have the big impulse wave, not an extended fifth wave, but an impulse wave nonetheless. And then we have an ABC corrective wave. And if wave C drops down the same as wave A, if they go the same distance, we can expect AMD to fall to about $140. So that's $12 less than where it is right now, something we could take advantage of. And finally, I want to look at one more chart. Here we have Clorox. Now, Clorox is something I've been watching for a while, and it hasn't really done much. Kind of came up here for a little bit, looked pretty good, but then it came back down, hit this support line right here, and over the last week, it's really been, moving higher. Now what I'm looking at to see if it can break through this resistance. This is from back before on the chart. But we got a couple of resistance levels here. If it can break through this, then I'll be watching to see if it can get to a new short-term high. And if it does, then it could really be breaking out. If it hits this top level right here at about 132 and then starts to fade, that'd be the time to get out. So it's a few different things. It looks like overall the market does not look good, especially with the S&P 500. And we looked at Caterpillar and AMD. So semiconductors, which often lead the market, start to fail. Then the market's probably going to go with it. I don't think it looks good, especially when you consider September is the worst month of the year. I would be protecting your portfolio, sit out, or come in with puts. But this month, it's probably going to be some fun.